trader psychology. Let me see here too. Oh, goodness. One of the things I'm looking at here too. Okay, what's going to happen here? There we go. The markets are obviously selling off pretty hard here, and I'm watching. If we can actually bump up to like plus 600 ticks, I'm going to short something. So I may have to switch back and forth to that. That's kind of one of my favorite setups on a day like this. So we'll keep an eye on it. And let me look here too. Okay, that's going to be that. All right. So here's what I want to talk about while I'm watching. This is a fantastic moves here going on in the market. So darn it, hold on just a second here. I'll show you what I'm looking at here. Let's look at the S&Ps. You've got pretty strong support coming down. Of course, the one day when the markets aren't quiet, right? You'd think I was on an airplane or something. Let me see here. So on the S&Ps, we're slamming into some support here at about 1302. Okay, so we'll keep an eye on that. So really what I'm watching though is if the ticks can get up to plus 600, I'm going to short. In the meantime, I've just got some stuff that I want to talk about here. All right, so you should see a trader psychology slide right now, and we're going to talk about trader psychology. I'll kind of intertwine it in with a little bit, just from Rob's example. I mean, I've had plenty of my own, but mostly I just want to talk just really how to kind of use the room, because what's going to happen is there's a lot of you guys. Well, I know a lot of people that follow in the trading room may have smaller accounts and say like what Rob is doing, and so there's some specific strategies that if you are trading a smaller account that you need to be aware of, because you're not going to have the ability to say scale in as much and things like that too. But more importantly, mentally, there are some things that you can do in terms of money management that will allow you to excel in an environment like this. Okay, and those are things that you have to be aware of. All right. Yeah. And well, the only trades I've done today is that. From our options newsletter, we bought puts on Goldman Sachs yesterday, and we're cleaning up on those today, and we're actually trying to buy calls on Cena today and Rackspace, and I think we're almost close to getting filled on those. So we're looking for an extreme flush down move like today to actually buy calls on Cena and Rackspace at these attractive levels. And okay, so if you guys do see the ticks get to plus 600, if I miss it, just let me know, because I do want to use that as a trading opportunity. So let's just kind of jump right into this, because I think it's really, really important here. And I'm going to turn down the volume a little bit because these alarms are going to drive us crazy because they're going to keep going off. Question, John, are you going to lower your bids on those given the circumstances? That's a great question. The answer is actually no. This is that's why you have those bids out there, is for days like this when you get a slam into key support levels. Shake man. Yeah, I mean the ticks are. I mean this is the kind of a day where you get a crash day. I mean we cannot actually. I don't think we have not had a positive tick reading yet today, and we're actually spending a lot of time between minus 600 and minus 1,000. So that's some real heavy selling here. Okay, so let's jump into this, and I'm just going to kind of relate, these from examples and stuff like that. So here's the thing with trading, okay? When you are trading, Flash Crash actually did have similar readings like this. When you're trading, you are confronting the real you every minute of every hour of every trading day, okay? And then here's the thing is when you are working, and this is all stuff that I've learned the hard way, okay? When you're like working at a job, you can, if you screw something up, you can blame it on other people. You can, oh, it's the economy. I mean, all these different things that you can sweep it under the rug so as to keep whatever self-image you have of yourself intact. All right, you can kind of change things and say, oh, well, this is what really happened. So the self-image that you have of yourself stays intact. In trading, you have to confront the real you. Okay, you're going to see gains on your P&L and you're going to see losses on your P&L. And how you handle that is essentially a reflection of your self-image, okay? And you can't fight it. You can't hide it. And that's one of the things that why trading is so attractive for many people, is that it becomes a challenge. I mean, it's like almost like a mental game of chess every day, and it keeps you. I honestly believe, because I've met traders who are 90 years old, and they are younger mentally than anybody else I know. And that's one of the things I like trading, is that you do have that exercise going on every day. You can't get complacent. If you get complacent, you're going to get the shit beat out of you. Pardon my French. All right, so confronting the real you, that's really what trading is about. So every human being is addicted to trying to be right and not being wrong. That's just human nature. Okay? Human beings are designed to do everything in such a way as to avoid failure. That's just the way that we're hardwired, and that's why it's very hard for traders to get into the habit of, it's like, all right, small losses and letting winners run and cutting losers short, because you'll get into these different mindsets of trying to be right. All right, and just got to be careful about that. You just want to notice when you're doing things, why are you doing them, what's going on, different things like this. And of course, what this comes down to is having a plan and following a plan, right? Now, everything that I just talked about, that's my wife. Hey, hon, I'm doing a webinar right now. Did you need anything? That's okay. I'll call you back. Okay, bye. So the thing about it is that what works in other areas of life does not work in trading. Okay, that's just the reality of it is. In life, if you want to be successful at something, you use determination, you use positive visualization. You got to use some cojones sometimes, take risks. In trading, all that stuff will kill you, because what happens in that situation is that it's like, you listen to a Tony Robbins tape and say, and you hear Tony Robbins going, all you got to do is visualize, yourself winning at something. And in trading, that doesn't work, right? You could visualize a trade turning into a winner, but that doesn't mean it's going to be a winner, okay? So that's the stuff you got to be careful of. So here's an example too. In reality, if we love someone, we don't have to actually tell them. This way we avoid the failure of finding out if they love you back in return. I'm not sure why I use this example. I do tell my wife that I love her. And we find a way to justify to make us right. That's just how humans are designed. So just be aware as you're trading, your brain, the human brain, is programmed to make sure that you're doing stuff that's right. And in trading, people associate being right with making money. And that's what you got to be careful with as a trader. Okay? And we know, Rob and Hubert and I know many different traders, and we know traders who only win 40% of the time, but they make money, okay, because their winners are 4, 5, and 6 times bigger than their losers. Everybody's going to be a little bit different like that, okay? Rob had this amazing streak where for 17 months he didn't have a losing trade, but as he's pointed out, there were a few flaws in that system, namely with the hard stops that came into place. And yes, he had the backup of the backup of the backup, but when a perfect storm comes together, and this is what Rob has talked about and acknowledged, it can get you in trouble. Now I'm excited looking forward to in the future, because I've seen what Rob's entries are second to none. I like to listen to him in the background and find out when he's doing something, yet I still apply my own trading methodology and money management techniques to those entries. Okay, so like on the Russell trade that he's talked about, my day trading strategy for the Russell is to give it 20 ticks, and if I get stopped after 20 ticks, I'm done. And so I took the same trade, because if I looked at my previous trades that I took with Rob, I'd made a ton of money following his stuff. So I'm certainly going to take this trade as well, but I'm also going to follow my own money management rules. And there was a couple of other trades that he was in that he ended up making money on, but I was stopped on, because according to my money management rules, that's how much I was willing to risk. All right, and it's very important, because when you have somebody like Rob, it's a very unique set of skills that he has. He's more patient than anyone else that I've seen in terms of entries. And to me, it's almost like having this awesome indicator. I like using the squeeze, I like using the reversion bands, and I like using Rob Hoffman, okay? But I'm still going to apply my own money management techniques to that, okay? Hope so, if that makes sense. Oh, thanks, David. Yeah, you know, it's funny. We were talking about. I have actually never I've never been I think as busy as I am now than I've been in my life. It's like part of, you know, trading. McGraw-Hill's on me for the deadline for this book and stuff like that. And, you know, the reality of it is, and for those of you that have, you know, wife and kids and stuff like that, is, you know, 6 or 7 years ago, I could have just stayed up all night for a month and knocked everything out. But, you know, you got to manage, and it's like, you know, your family's part of your life, and you've got to incorporate that into kind of your daily structure and just trying to figure out, you know, the best way to do all that stuff. Ticks are at minus 300. So if they get to plus 600, let me know, and we'll take a trade here. So my 3 favorite indicators are the squeeze, reversion bands, and Rob Hoffman. Oh, that's okay, Kristen. So yeah, so the book I'm working on is a revised edition of Mastering the Trade. So I'm going through, I'm adding 5 new chapters, I'm cleaning some of it up. My deadline is September 15th, and honestly, if I'm going to make that, I'm going to have to start blocking out like 2 to 3 hours a day, every day until that time, and it's just very hard. All right, so let's jump in here now. Okay, so thoughts on speculation. In trading, the results are right there on your P&L, so it's impossible to avoid, okay? And human beings have a hard time learning how to deal with this, because in all other areas of their life, they can gloss over and reinterpret situations to make it seem like they did not actually fail, okay? And this, I mean, we all do this. And I know, like, I remember when I worked as a financial analyst in corporate America back in the 90s, and, you know, if someone screwed up an analysis on a company, you could just blame it on the economy or, you know, whatever. And it was like, oh, okay. So, you know, there was really no, and it's not, the word isn't accountability. It's looking you know, it's, there's you that the world sees, and there's you that you think you are, okay, your self-image. And in a lot of those situations, you can reinterpret things so that your self-image that you have of yourself remains intact. In trading, that's very, very difficult to maintain that self-image if you're having losses day after day after day after day, okay? And that's why trading is so great, because it forces you to confront that. And I mean, I think it's something that's, you know, part of staying young is being able to challenge your, you know, beliefs about the world or beliefs about yourself on a daily basis, and trading is a great way to do that. And if you can get to the point where you can mesh together your trading style, you know, with your self-image, you can do this for a living. Yeah, if you bury your head in the sand, you're going to get your butt kicked, just like those two. All right, trading is the only profession in the world where people have to confront brutal honesty with themselves and with the P&L. All right, yes, you can hide statements from your spouse. They may never find out, but you can't hide it from yourself. Okay, so that's part of the challenges of trading. So how do you get the right mindset? Oh, so here, you guys want to know a little secret? You guys are, so if you're looking at this, here's what I did with this PowerPoint. The text is mine, okay? And I went through and just typed up, these are the key points that I wanted to do. But I did not get any of the images. That's called outsourcing. All right, so getting the right mindset. I need more weight, yeah. So I didn't grab any of these photos. We'll see if there's any women in here. Now, here's a saying. I actually have this on my wall. Back in December, I spent 3 days at a prop firm in Shanghai, which was an experience in and of itself. It was like 40 traders. 50% of them were men, 50% of them were women. I say men and women. There's really more boys and girls that are right out of college. And we spent 3 days together trading. I would show them strategies that I used. They were showing me strategies that they used. And this was a saying, and the founder of the firm, he's got 600 traders around the world in India and China. And what he did is he outsourced brains. Okay, he's like, well, I can hire a Harvard MBA for $250,000 or the equivalent out of Beijing for $25,000. And these guys work harder, and they don't have a sense of entitlement. I'm like, okay, let's partner up on that. But the saying that they have in their office is take the risk. If you win, you will be happy. If you lose, you will be wise. And it's so true in trading. I mean, you're always every trade is a risk. If you win and make money on the trade, sure, you're going to be happy. If you lose money, you'll be a little wiser. And I can tell you, after trading for 20 years, I feel like I've got wisdom spewing out of me some days. Oh, this is another graphic that they'd put together on that one. That was good. So in trading, be cautious and careful in setting up a trade. And this is where I think Rob excels, okay? He's cautious and careful in setting up a trade, but when his level is finally hit, he's bold in his execution of the trade, all right? Now, we've already talked about the pitfalls of the trade, and what he's doing to kind of change that and do all that. But again, I've not seen anybody do this part better. Okay, and if you get this part combined with the money management, this is something that you can do for a living. So this is something that's very good, and something it's good in following somebody like Rob, because you will learn to be patient for good entries. What happens is a lot of times people get bored, and so they just place a trade, and it's what a waste, because then what happens in that case, you end up missing the good setups because now you're managing a crappy one. Okay, and that's a big thing. It's okay to be flat, and that's one thing that Rob does really well. He's flat most of the time. Okay, that's another good graphic there. Be cautious and careful in setting up a trade. I guess when they did this for me, they would have wanted me to choose which one I liked. I actually like both of them. Yeah, so you should see a PowerPoint. If you can't see it, you might want to log back out and log back in. Now here's something. This is another one that I like to do too, because it's like, ruin often overtakes those who have nerve. The stronger the nerve, the more probability of staying in a trade too long. Okay, so this is something that again, this is where like if the perfect storm can come together, and you've got a lot of nerve, you've got a lot of courage, that can really trash you. So it's really important when you're in a trade to either have a hard stop, or if it looks like the market is just not acting like you thought it should, it's okay to take a small loss. Get out. Re-entry is only a commission away, okay? Now, if small profits are taken, then small losses must be taken, okay? Not to have the courage to accept a loss and be too eager to take a profit is fatal, and it is the ruin of most traders. And what will happen is, in situations like this, is that again, the market reinforces bad habits. Okay, if let's say that you've decided your full contract size is 10 contracts, all right, and so you have 10. And you could say you scale in one at a time. And scaling in, by the way, is a great strategy. You just have to know what your max contract size is. If your max contract size is 10 lots, great. You can scale in 10 times if you're doing one contract at a time. Okay, you've scaled into full size. Scaling is great because you're never going to get really the perfect entry. That way it kind of lets you average out your entries into a support zone or a resistance zone. So the problem, though, is what will happen is, let's say if your max size is 10 lots and it's going against you and you decide to add 10 more, you add 20 and bring down your average cost and you make money on it, the market just taught you that that's okay. So it just taught you to throw out your original trading plan. That's where you have to be careful. The market will suck you in, okay? The market will suck you in and abuse you. If you deviate from your plan, it's going to the market can be very convincing that, hey, wow, I just made this exception to my rule and it worked out. So that's great. Well, that's great. That's what the market wants you to do, because it's going to come back and grab all your money at some point. You just got to be really careful about that, okay? How can you scale in one contract as your max? So that's the reality of it. I know some of you guys are doing one contract at a time, and that's fine. And again, that's right. I think Rob is real helpful because his entries are really solid. So you just go in with your one contract at one of those conservative entries. But what you got to do is just figure out how much you're willing to risk on that trade. How much of your account are you willing to risk on that trade? All right. So when forming a market opinion, leave room for chance. So like today, we're watching the market. You know, the Russell's down 17 points, the S&Ps are down 16. So my opinion is wow, this market is selling off pretty hard, and it has a pretty good chance of, you know, probably selling off more today. That's my market opinion. But I'm also going to leave room for chance. What if Ben Bernanke comes out and says something that causes the markets to rally? I mean, you know, you never know, all right? Now, here's something I found just in general, okay, and this is more just trader psychology. Quiet, weak markets are good markets to sell. So if you're watching a market and it's kind of chopping back and forth, it's quiet, it's weak, typically at some point there'll be a flush, okay? And there's two strategies there. Rob's strategy, which I like, is that you wait for that flush to happen and then you're a buyer. One of the things I also like to do is during this time you'll get a squeeze and you can actually take short positions in anticipation of that flush down. But quiet, weak markets where it's an individual stock or silver or the S&Ps, if it's a quiet, weak market, at some point it has a high probability of getting a flush. And again, the two trades are, is one, you can be down there as a buyer of that flush, which generally is what Rob's strategy is. Or if you have something like a squeeze, you can sit there and be positioned for it. So when it flushes, you're participating in the move. And then you can, you know, reverse and go long too. But you've got to understand that. You know, if you're in doubt, then don't do anything. Don't enter the market with half convictions. Wait till the convictions or the setup is fully matured, okay? Standing inside is a position, and it is most times the best position. In your opinion, can we trade for a living watching Rob? That's a great question, Gary. My opinion is yes. My opinion is if you follow his trades exactly, then you're not doing yourself a service. You still have to you have to sit there and go, all right, I'm going to follow Rob's entries, but I'm only willing to risk this much. Okay, that means that you'll get stopped out on trades that with Rob's style, could make money on. Okay, but that part doesn't matter. What you want to look at is how much you're willing to risk of your account. All right, and like I said, I got stopped out. I've been stopped out on trades that Rob has made that he's eventually made money on, but that's just because that's my risk tolerance for a trade, and that's the way I look at it. So to me, I like to look at entries. I like to look at 70% win ratios, and with Rob's entries, I found I've been able to do that. Did I fade the first minus 1,000 tick reading? Usually I wait for the first. It's a good question. I didn't. Usually I wait for the first half hour. But my rule of thumb on that is what you're looking for when you're doing tick fades is a choppy market. So a choppy market is you wait for generally the first half hour. If the S&Ps have traded in a range of 6 points or less, that's a choppy market. Well, today, you know, they were already down 10 points. So you want those tick fades work best in choppy markets. And oh my God, is that lean hogs are getting? I'm sorry, they're getting. I was just looking at some other charts here. Lean hogs are getting annihilated. So good news if you like bacon, that price is coming down. Oh, you know what? Never mind. That was a contract rollover, I think. Okay. Well, and then you saw that Soros is returning money to people and you know, going to turn the money back to people and stuff like that. So that, you know, that may have pressure on the markets as well. The big thing is, though, is it doesn't really matter. You know, you can watch the ticks and say, wow, somebody's selling. You don't need to know who. Okay, more thoughts on speculation. Respect your limitations because your limitations will not respect you. Okay. So as you're trading, everybody's going to have limitations as a trader. You know, kind of find out what they are. And if your limitations are, say, you know, discipline, like you just can't, you always are doing impulse trades, then, you know, you've got to respect that, and you've got to start looking at different ways to control that. You know, maybe it's limiting yourself to one trade a day, okay? And if you violate that, it's, you know, that's when you kind of have to work with a trading partner. and say, all right, if you did 2 trades today, then you're done. We're turning off your account. A lot of times it helps. That's kind of what they do, like at a hedge fund. If you're by yourself in a room and you're not accountable to anyone, you can kind of do whatever you want. That can be very good or very bad. But if you do have some, if you're struggling with some of those things, you're gonna have to man up and face up to it. If say your daily loss limit is $500, but you keep exceeding that, you need to be with a broker that will turn your account off after that $500 loss. And there's things like that you have to put in place, or this is not going to work out for you. Okay, respect your limitations, because your limitations will not respect you. Yeah, we'll take a look at them I'm kind of watching the markets here too, and we'll look at some of the ticks and stuff like that. So this is a good one. So in his secret heart, and this is her secret heart too, every man or woman thinks the universe is especially hard on him or her. Okay, none of us are unique. I know we all like to think we're unique, but we're not. When it comes to the market, we're all programmed the same way. We all have the same emotions. We all want to make money. The universe is not especially hard on any one of us. It just seems that way. This is the other. Which one do you guys like better? Okay, do you guys like this graphic, thoughts on speculation, or you got the guy with his head in his hands, or this one? It looks like he's kind of a homeless guy. Which one do you guys like better, homeless guy or career guy? Psycho everybody. Okay, that's good. That's helpful, because then I can, when I go through this, I'll keep that one. Before and after 08. And here's I love this picture. Many have the courage of their opinions. Few have the courage to abandon their opinions. All right. So if you're holding on to your conviction in the market, you are sitting on a train track like this guy, waiting for the train to come run you over. You also want to have the courage to say, you know what, I'm changing my opinion here. That's a very important. Okay, so here's a good question, Trevor. Hey, John, I'll tell you what is frustrating. How does a trader decide how much is reasonable to risk? And just because it may be an amount suitable for me doesn't mean the market will respect my idea. So we really need to know what stop amounts the market generally respects. Okay, so here's the thing. If you're trading the S&Ps, and hold on here, the ticks just got up to break to positive here, so I'm going to look at potentially shorting something here. Okay, so here's a big difference on that. Let's say that you decide that you only want to risk 1 point on it. Let's say you've got, $10,000, you decide to trade, 5 contracts at a time, and because of that, you can only risk 1 point on the S&Ps. The reality of it is you're going to get stopped out a lot, because 1 point is nothing. And what would be better is to risk the same amount of money, but do wider stops. So instead of 5 contracts in 1 point, do 1 contract in 5 points. Like a 5-point stop on the S&P gives you a lot of wiggle room, all right? And that's the biggest mistake I see a lot of traders make, is that they use too big a size and too tight of stops. Use fewer contracts, use wider stops. And a lot of times there are setups I take where I'll risk 2 points to make 1, especially like in the tick fades. Now you might sit there and go, John, that's stupid. Why would you risk 2 points to make 1? Well, if you've got a setup that wins about 80% of the time, and you're risking 2 points to make 1, well, over the course of a year, that's a 50% return. Okay, that is sustainable. So you just want to be aware of that. All right, I'm just watching this. So ticks here are getting up to plus 200. I'm just looking for an opportunity here to short it. So that's the biggest mistake I see people make, because they're so focused on making money. They use bigger size and tighter stops, when really if you reduce your size, use wider stops, over the long run, you're going to have a better ability to make money, okay? Yeah, so if I take a trade here, I'll switch it over so we can watch it. I'm just kind of watching the ticks right now. Okay. I am watching the Russell here and the S&P futures. I'm not doing anything yet. What I'm probably going to do here on, let's see, the Russell's bouncing up a little bit. I'm just waiting to see if the ticks will hook over here. Now, what I'll do with that, for example, on the Russell trade, on these tick fades, I'll start off with a 20 tick stop and a 10 tick target, but the 10 ticks target is only on the first half of my position. At that point, I bring my stop to break even, and then I have the ability to get a potential runner on the remainder. So that's kind of also where that comes into play too. But even that first risk of making those 10 ticks risking 20 is about an 80% win ratio. So that in and of itself is a sustainable winning probability. When you add in the fact that you're taking half off and then trying to get a runner, that actually increases the odds from there. All right, so the ticks have popped up. We did get up to plus, like almost about plus what, 550 or something like that. And I'm just kind of waiting to see if the ticks can hook back over here to the downside. So question in your, yeah, we did get, okay, we got up to 600, right, good, that's a good trigger. In your book, the volume was 10K. It's actually kind of close to that now. It did jump up to about 25K. And then the volume actually in the S&Ps has actually been dropping. In 2008, it was trading like 4 million contracts a day, and since then it's dropped a lot. All right, so we'll keep one eye here on the markets. Looking to see if we can get a tick roll over here. So thoughts on speculation. There are two kinds of wisdom: to persist in things worth doing, and to abandon things not worth doing. This is really something to keep on your trading computer, okay? To persist in things worth doing and to abandon things not worth doing. It's actually a good rule of thumb for life, too. There's going to be things in your life that are worth doing. Maybe they bring you fulfillment or something like that. And then there are things in trading that either don't work or things in your life that don't work, and just it's okay to abandon them. So some of the smart things, some of the smart things, like we always joke, like, oh my God, I've got too many things on my to-do list. Somebody's like, well, just take them off your to-do list. It's like, I mean, there's some things that are just, it does make sense to just abandon them, and that's okay too. I'm confused how to factor in the math when averaging in with multiple contracts. Does each contract get its own stop and target in the form of a bracket? Now, JB, you can use your average price. So let's say for you that full size is 10 contracts, and on that 10 contracts, you're going to use a 3-point stop. Well, if you have one contract, that's actually a 30-point stop. So you can kind of, you can put in that hard stop if you want, but if you risked, 30 points on that one contract, that'd be the same as risking 3 points on that 10. So you got a little room there. So what you like to do is, you kind of, as you build up your position, okay, there's my average price, and, here's my stop. John, in your book on page 24, you wrote that adding to a losing position is insane. How can one average down like Rob does and not have the freight train get you? All right, so it's a great question. Now, if you average down to your full size, that is fine. It's averaging down past what you consider full size. So again, if we use the example of, let's say that you decide your max size is 10 lots, okay? You can average down to 10 lots because that's your full position. That's totally fine. Where people get in trouble is if now you say it's still going against you, so it's like, all right, now I'm going to add 10 more, I'm going to add 10 more, I'm going to add more. Now your trading plan calls for 10 lots, and suddenly you have 50. That's insane because you are completely exceeding the parameters of your trading plan. So averaging down on a loser is okay if it's in process of building up what you consider max contract size for your account. Does that make sense? So say your max contract size is 2, and you buy, one gold futures contract at $13.95, and you buy another one at $13.90, and you have your stop at $13.87. That's okay. But if your max contract size is 2, and suddenly you've got 27 contracts, that's insanity. So that's the key. Part of your trading plan is understanding what your maximum size is that you want to trade. I do 2 kinds of trades. For A lot of trades, I'll go all in. It just depends. It depends what it is. It depends on the time frame. You know, if it's like, say, a 5-minute chart, and it's got a squeeze ready to fire off, then I just get a position on. You know, the ticks, it's a little more nimble because, you know, the ticks can pop up, they can pop down. So I like to average in, just, you know, if you get a 1,000 tick reading, good, a minute later you may get a 1,200 tick reading. So then I can, you know, continue to add contracts to that up to my full position. Yeah, and here's the thing is, like, closing out a trade for a small loss, it's so part of trading. You know, it's like if you're sitting there going, you know, say your max loss on the day is $500 and you're sitting on a trade and, you know, it's down like 100. And so there's two things. You're like, well, gosh, if this gets up to break even, I'm going to get out, or I just don't like this trade. You know, it's okay just to get out. As a trader, it's your responsibility to take small losses. And believe it or not, is, you know, most even pit traders and stuff like that, like half their trades are actually even, it's not only are half their trade, it's either like a losing trade or a scratch. That's just their mentality. That's just fine because they're sitting there, they're really focusing on small losses. But then when they do get one that's working out, then and that's what really, really where they excel is that they sit on a winner. Insanity seems to be normal human behavior. Yeah. Yeah, there's a fine line between being bold and being stupid. It is. If you're in I always go back to your own trading plan. And if you're acting within the parameters of your own trading plan, that's fine. It's when you go outside the parameters of your trading plan, that's when you're messing with the devil. How do you repair yourself in your account after taking a huge hit, i.e. drawing down 60%? Mark, that's a great question. And what this goes back to is kind of a back to basics. And it's more about, you know, kind of getting back into a groove of following setups. You know, if you sit there going, God, I got to make up that money, it's going to be tough. Okay, you've got to get back to basics, start following setups. The worst drawdown that I ever had, and this is the short version of the story, in terms of how it impacted me personally, was my wife and I were going to buy a house back in this was like 95 or something like that. And I had a $150,000 account that I traded options on. And what I would do is every week or every month, if there were profits, I would sweep them out. And, you know, we decided to buy this house. It was winter. You know, my wife had never seen snow before. And we're going to use $30,000 out of that account to buy the house. And I got this idea going, gosh, I really want to take that money out of my trading account. Why don't I just do a big trade and try to make $30,000? Well, you guys can imagine probably what happened. And I loaded up on some OEX puts. The market rallied 4 days in a row, and I blew out my account. I mean, it went from $150,000 down to like 10, and I needed money to buy the house. Like I had to go get, and I didn't, you know, of course I didn't tell my wife what happened. I went and got some credit cards and maxed it out so we could still buy the house. And you know, that was something I didn't trade again for like 3 months, and I really had to kind of take stock and go, you know, what the hell was I thinking? Because at that point I'd been trading a while, but what happened is that I was trying to make money instead of just waiting for setups. Okay, and so when you get in a situation like that where you have a drawdown, and how I kind of pieced it back together again is I just got back to, like, you know, I didn't try to make up the money, and just got back to focusing on setups. And I'm going to go through a money management trading program here that'll help you with that too. Oh yeah, I played golf after that, and I threw up on every hole. I like walked 9 holes and I threw up, and it was brutal. Yeah. How do you know when to avoid using otherwise valid trend setups? So yeah, Jonathan, a lot of times, I mean, a lot of setups obviously work better when a market is trending than when it's, you know, chopping back and forth. And part of it is just recognizing that, so in a choppy market, my favorite setup is a tick fade, because you're fading those extreme little pops. And how do you tell a choppy market? Well, if it's in a tight range all day and it's not doing anything, those are days where, you know, you're not looking at your normal setups. You do want to, like, maybe fade a pivot level. You're looking for a slower market. You know, you're doing a tick fade, that kind of thing. Oh yeah, so that story I just told, so I never told her actually, and what happened was like I really forgot about it, and like 4 years ago, I was invited to speak at a conference, and I was sitting there giving a talk, and her name is Maria, and she usually doesn't travel with me. I mean, we've got kids and stuff like that, but she came. I think this was actually no, we had one kid at the time, and I'm sitting there telling the story, and she had never heard it before, and like afterwards, everybody's like, oh my God, how'd you deal with that? And she's just like, She came up afterwards. She's like, so, John, what else have you not told me? I was like, I swear that is the only thing that I've not told you. Yeah, we bought the house. Yeah, it was brutal. There was a good question here. I'm not afraid of being stopped out. I use them every trade, but I am afraid of not being successful at this because I am getting eaten up little by little, which is killing my confidence. So I'm freaking out inside, but I'm obeying my stops. Yeah, Jason, and stuff like that too. Literally, I mean, I don't know what size you're trading, but try cutting your position size in half. Obviously, if you're doing one lot, you can't do that, and widening your stops. Most people use too tight of stops. My wife doesn't understand that I don't get emotional when things go bad. It makes her mad because she thinks I should. Yeah, I mean, that's the tough thing too with this, it's like, how'd your trading go? I mean, I don't really tell my wife the numbers because she'd freak out. Like, how'd today go? Oh, yeah, today I lost $5,000. It's like, oh, what? Da, 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 da. And I mean, that's just, it's like, to me, it's just part of trading. Yeah. The 9 trigger. Yeah, I mean, Thomas, that's a great way to kind of scale out of that. How many traders do you know that make over $1 million a year trading? I actually know quite a bit, but most of them are guys that, they've done it for a while. They've built up their accounts. A lot of them live in like Connecticut, New York. That's just where a lot of traders are that's kind of where they hang out. I think the other morning you guys were in, there's a room, a private room where we just kind of, these guys, a lot of them are stock traders, honestly. I don't know a lot of guys who like doing, there's a couple that do futures, but most of the guys I know are stock traders because that's kind of was my background. It was more stocks and options and things like that. Guess a support for married traders room would be more successful than a trading room. Yeah, probably. Oh, that's good, Jason. Yeah, I look forward to seeing you there. Let's see. All right, what are the ticks doing? Yeah, ticks are kind of staying a little strong here. I'm just kind of, I mean, these markets, I'm not in a big hurry here. I've been watching to see, the volume's kind of calming down. We'll kind of see how it sets up here. All right, so here's a good one. I've been grinding between, 0.5% to 1% return every day on average the last 2 months, but every now and then I take a trade that goes against my plan. I don't know why I keep doing this. Any tips to stop myself from doing this? Thinking about it. Yeah. So yeah, what happens here is, as a trader, when you start focusing on the money, it's like, wow, I'm making this much every day. Usually what happens is people start focusing on, wow, I'm gonna try to make more money doing this, and that's when things go to hell in a handbasket. So you just want to really, every day, every trade, focus on the discipline of executing the trade the same way each and every time, every single trade. Because people get confident. It's like, wow, this is working out all the time. I think I'm gonna keep my streak going here, and that's the reality of it. Is you got to do that every day. What % of your trading is done by system trading? About 25% now. It's slowly increasing. Yeah, so the auto trade system, the first 3 weeks was phenomenal. The last week it's had a little rough spell, and today we're still waiting to see if it's going to do something. Given that 75% of, okay, hold on, I'm losing some of the questions here. given that 75% of the market volume is short-term trading, and probably only 10% retail traders, doesn't this weaken the concept of support and resistance? Here's the thing about support and resistance, because that's a good question. Everybody can see it. So I actually like to buy breaks of support and sell breaks of resistance, because those are stop runs. So think about it like that. You know, everybody knows where support is. Everybody knows that there's going to be stops below support. That's sort of where the liquidity is. So if you want to get long, big size, i.e. a program trader, you're going to want to push it below that level to where all the stops are, so there's a lot of liquidity so you can get your position. So that's why it's important to understand psychology. You want to, you know, like today, we're adding those call options on Rackspace and Cena because we're blowing through support levels. And that's where we have our bids is below support. We want people to get, for me to get filled on a lot of these trades, other people have to experience pain. Other people have to be going, oh my God, you know, I'm getting stopped out here. That's when I want to get filled. So just kind of, you know, you want to think about it that way. Unfortunately, in trading, other people's pain is an entry opportunity. So think about it. The times when you experience pain, there's somebody using that as an entry opportunity. What kind of monthly, yearly return would be considered to be good return for futures and options? Yeah, so futures and options are unique because of the leverage. Here's the thing, if you find a setup that you're comfortable with, you know, let's say you start off with one contract for $20,000 and you have a setup that you're comfortable with, then you can up it to 4 contracts for $20,000, et cetera, et cetera. You can fluctuate your returns that way. But if you've got a smaller account and you're trading leverage, I think a good goal is 5% a month. And the thing about it is, if you focus on 5%, you're going to have some days where you catch a runner and things like that, where it becomes more than that. But to me, that's a reasonable plan. You know, you can kind of risk 5% to make 5%. So if you lose 5% that month, you're done, and then you go on to the next month. So, you know, oh, hold on just a second. Hey, Michelle. Okay, awesome. If you want, yeah, you can just, can you just put it in that, you know, that little, there's that little, it's like a chest right there on that cabinet right when you walk in. If you just want to lift that up and throw it in there. Yeah. Yep. Perfect. Okay, thanks, Michelle. Okay, bye-bye. I haven't been able to find my wallet the last 2 or 3 days, and I finally remembered that I think I left it. I'm like, the only place I could have left it was this weekend. We have a place out in the country, and this weekend we're out there, and you know, we're packing the kids up and stuff like that. And I vaguely remembered after searching my office and searching the house that I'd put it up there on a shelf. And so there's a lady that goes there a couple times a week to check on the goats to make sure they're still alive. And I called her and said, can you just check and see if it's there before I actually drive out there? Okay. All right, so here's what I'm gonna do. Hold on. Let me look at I'm looking at the Russell here real quick. So I'm gonna show you a setup. Yeah, so today I get to drive. Well, I guess I don't have to drive out there today, but it's always nice to actually have your wallet. Makes life a little easier. So 805. Guys, I'll be with you in just I'll see if I don't need to share my chart yet. I'm just looking at a couple of things, and then if I need to do something here, I'll share it with you. So, okay, so here's what I'm looking at doing here in the Russell is if we can break support at 805.40 as I'm looking to get short. So we've already had the kind of the tick run up. So we may actually just keep rallying here. Maybe the ticks have changed. But if we roll back over and break 805.40, I actually want to short. So I'm just going to put a sell stop order here at 805.30. And if I'm hit, we'll have a 20 tick stop and then see if we can take out the lows. All right. So if it gets close to that, I'll go back to that. But I just want to tell you what I'm doing. Okay. Doing well with the VIX. Yeah, the VIX is good to watch. Ever experimented with the turtles approach to futures? Yeah, I'm actually a big fan of. Oh God, what am I? My mind just went blank. Okay. Did you say? Sorry. Okay. Experiment. Oh, what am I trying to think of? The average true range? No. There's something in the my mind went blank. What am I thinking of? There's that. Is it the average true range? Where I do like to scale out at average true range targets. John, you say you increase your stop loss and take a small loss. These two rules are in contradiction since larger stop loss will make a larger loss. So the question is, do you wait for the stop loss to be hit before taking the loss, or do you take the loss ASAP? Okay, good question. So it's really more about the signal. So let's say you take a squeeze and you take it long. Okay, now the trade's kind of chopping around and maybe you're down a little bit and you haven't been stopped out. Well, then the squeeze momentum turns. So, if it's a long squeeze, you're looking for the bright blue, light blue momentum. If it turns to dark blue, the squeeze is no longer valid. So you can get out of the trade. So a lot of times what will happen is you end up getting out of the trades before your hard stop is hit. I finally put a dry erase calendar up at my wife's request. She freaks at small loss days. I lost big on Rob's loss, and I thought she was going to end up in an asylum before or after she killed me. Well, the good news is, though, is at least you were kind of getting her involved, and that's something that you guys are both on the same page on. So I think that's good. Greetings from Spain. Hey, Javier. John, I am wondering, sometimes we trick ourselves when we make a bad trade and we move our stops or just trick ourselves with excuses. How can we fight that mentally? Yeah, that's really the trick, Javier, is it's really having a plan in place, and your goal then is to execute that plan on every trade. Unfortunately, that's the reality of it is that you just got to hammer yourself on every trade to do that. And that's where it's not even so much discipline. It's just like your job as a trader is not to make money. It's to follow your plan. Okay. And if that can sink in, it's just going to make your trading life a lot easier. Your job is to follow your plan. It's not to make money. Anytime you start trying to make money, that means you're deviating from your plan and you fall up the risk with that. And the reality of it is on every single trade, and that's one thing if you watch Rob in the room, his entries are the same. I mean, he doesn't say, oh, let's try this gang and see what happens. It's like, oh, I'm waiting for my entry. It's, following that plan in terms of, the entry levels like that. And you have to do that on every trade. Again, I think a reasonable goal is on an account is 5% a month. So that's a reasonable goal. If you have a plan to get more than that, I think it's kind of pushing it a little bit, but it's a reasonable goal. Sometimes you'll make more, sometimes you'll get stopped on that month. Question, do you think it would be prudent to have on my trading plan that I execute at least one trade a day, or is that putting too much pressure on? Oh, Angela, that's a great question. I would not worry about that. To me, there are some days when the best trade you can do is no trade. Have you ever heard the saying that the best, I think it was John Paul Getty who said this. He's like, some of the best deals I've made in my lifetime are the ones that I passed on. And a lot of times, no trade is totally fine. That's tough as a trader because you think you always got to trade, right? You don't. You don't always have to trade. And I actually know one guy, he doesn't trade Monday or Friday. And he'll even watch the market sometimes. He just doesn't trade. So he just trades Tuesday, Wednesday, Thursday. And on those days, he's mentally alert. He's not tired or anything like that. And that's part of the benefit of the auto trading is there are no emotions, okay? A good discretionary trader is always going to make more than an auto trader, okay? But the auto trade, at least with the auto trading, you don't have to deal with the emotions and stuff like that. All right, let me get a cut. Yeah, I'll definitely make this presentation available. Why do CTAs not make money in these managed funds when they're supposedly pros? Okay, Carl, that's a great question. CTAs, the secret to CTAs is they are not trying to make money. They are trying not to lose money, okay? As a CTA, their goal is to make like 1.5% a month and not lose too much money doing it, because if they can do that, they're going to get institutional funds. Institutions don't like a lot of volatility. That's the whole goal of a CTA, and that's why as an individual trader, you have the opportunity to have better returns. Managed funds like that are not interested in the volatility swings that come with trying to achieve higher returns, all right? I know a lot of CTAs that run hundreds of millions of dollars. Their goal is to make 1 to 1.5% a month and not lose money doing it. Okay, that's a whole different strategy than, that's a whole different strategy than what individual traders are doing. Yeah, so that phone call from Michelle, yeah, so I left my wallet there. So I was just called, I couldn't find it anywhere, and I was just going, oh, God, I know. I mean, I'm really good about putting it in like 2 different spots. And then I was like, oh, when you're out there, can you just look and see if it's out there? Because I don't want to drive out there an hour and then it's not there. Yeah, technically I was going to go about an hour, but I've actually got some more to cover. So let me jump back. Let me answer a couple more questions here, because I do have some other stuff to cover here. Okay, so good question from Jay. I have a different problem. I treat my demo account exactly the same as my live account. However, when I trade on my demo account, I am far more successful than when I use my live account. Any suggestions? And Jay, believe it or not, that is a very common problem, because what's happening in that situation is in a demo account, you are completely 100% objective. You may be trading the same way, but mentally you are 100% objective because you don't have real money on the line. If you are trading live money, you're not objective. So just mentally how you feel when you're in a trade. Are you more antsy or tense when it's real money on the line or a demo account? Your goal is to actually get to the point where you can trade the demo account the same as a live account. All right, I am way behind on my questions. There are about 30 here. Let me pause from the questions, because I see there's a lot of actually good questions I want to answer, but let me pause because I do want to try to finish some of this presentation here. And I think this will actually answer some of it too. All right. So where was I? Okay, here we go. Thoughts on speculation. Stubborn men and women don't live long financially. The foolishness of the many is the opportunity of the few. And we've talked about this a little bit. The entries that I'm getting on Cena and Rackspace today on the call options, now they may not work out. I mean, I may end up getting stopped, but what I like about it is I know there's people experience a lot of pain right now because those are under some key support levels. So they're getting flushed to those levels, offering me a nice opportunity to get long. Now, it may end up being a trade that gets stopped out, who knows, but I like the entries. That's the kind of entry that I like. Thoughts on speculation. Trading is a kaleidoscope, continually changing and forming new combinations. Take a fresh look every day. And remember, it's not how much you can make, it is how much you can lose. Now, I want to start getting into a money management system here that I've talked about briefly once, but I want to go into more detail here. And this is something I think you guys would benefit a lot from Rob's room. Professional gamblers are not astonished at winning and losing, but traders and investors are. Okay? Gamblers do not panic at a series of losses. Traders do. Gamblers learn to roll with the punches because they take so many of them. They also learn to manage their money in such a way that no one session leaves them broke. So you can think of it as money, something that will buy a car, or the proverbial mink coat, or anything like that. Money is merely a tool of the game and a means to keep score, all right? The moment you start thinking, hold on, I gotta drink some water here, my throat is parched. Okay. The moment you start thinking of a gain or loss in terms of purchasing power, you have now lost sight of money as a tool of the game, okay? And you have sent yourself to playing less skillfully and more emotionally. The moment you start thinking of a gain or loss in terms of purchasing power, you have now lost sight of money as a tool of the game, all right? And you have sent yourself to playing less skillfully and more emotionally. And that is the problem in a nutshell right there. When you start focusing on the money part of it, you actually are now, this is somebody, when you were asking before about the difference between a demo account and a real account. When you're playing a demo, when you're using a demo account, you're not thinking of it as money because it's not money. Okay, you're just looking at it as a tool. When you're trading a real account, what I'm betting is you're starting to think of it a little bit more as, wow, with $500 I could buy this. And what happens with that attitude, you play less skillfully and more emotionally. Okay, and that's the big difference right there. Yeah, exactly. The house strategy I talked about. Why did I blow up my account? Because I was trying to buy a house. Now, here's a nice little tidbit that I like. And now in England, they say don't piddle away your chips. But I thought if I said don't piddle away your chips, some people wouldn't understand it. What it really means here in the good old US of A is do not piss away your capital, okay? There's always going to be that one trade a week or month that is a huge trade, a nice setup where everything comes together and you can see it clearly. You take it and you make a lot of money. The problem is that a lot of traders get bored and they've been screwing around the past few weeks on mediocre setups and they've whittled down their trading account. So a lot of times instead of making, when you get that big trade, you end up just making back the money you lost, okay? That is not the goal in trading, to make back money. To make back, you don't want to have like every 2 weeks great trade that makes back the money you lost over the previous 2 weeks, okay? Don't piss away your capital. Okay, so I'm going to check in on the markets here. So the ticks are not, we're still kind of getting like a low volume bounce here. We haven't really rolled back over, so no entries here or anything like that. So, all right, so not much going on there. Okay, in the great game of life, everything is in play. Everything. Your time, your money, your relationships, your social position, your education, your appearance, your health, your business are all simultaneously a hand of life cards and a stack of life chips, okay? You must not piddle away those chips. Your quality of your life is going to be determined by how you invest in all those things, all right? And this is really, it's an interesting kind of a way to look at it, but, you know, there's in China, it's almost like face. They call it, kind of calling it face, and it's like having, building up face, building up character, whatever you want to call it, in all these different areas of your life. And you don't want to piss that away. So how do you do this? You do this with integrity. Integrity is the key. Integrity is often thought of as doing what you say you're going to do in your relationships with other people. That is, if you say you're going to get something done by 3 o'clock, then you have it done by 3 o'clock. You've given your word and you stick to it. And by not sticking to your word, it erodes your own sense of self. You end up as a person who will put up with anything because you have little or no integrity. And I think that's a really key thing there. If you want to build back up your integrity, then stop saying yes to things that you really don't want to do. Okay, that's a good way to practice. What many people don't know is this is equally true in keeping your word with yourself. If you say you're going to work out at 2 p.m. and you skip the workout, you just lost integrity with yourself. Okay, and now what happens is your own, this is getting a little esoteric, I know, but what happens is your own sense of self is now starting to erode. Okay? So in trading, your word is that you will follow your trading plan. Okay? If you tell yourself you're going to work out at 2 o'clock, then by God, you need to go work out at 2 o'clock. Okay? Or your sense of self is going to erode because you know that you cannot keep promises to yourself. Your sense of integrity starts to erode. In trading, your word is that you will follow your trading plan. Okay? This has nothing to do with how much money you're trying to make. It has everything to do with keeping your word to yourself that you're going to follow the trading plan that you laid out. When you do not do this, you are not in integrity with yourself. So now you have permission. Okay, this is where this whole thing comes together. When you don't follow your plan, now you don't have integrity with yourself. So now you've given yourself permission to start doing stupider and crazier things in your trading. Okay? The key is to be in integrity on each and every trade, and that's how you got to do it. The reality of it is you got to do it on each and every trade. Not on some of the trades, not on most of the trades, but on each and every trade, okay? Okay, so that's that part. Now I'm going to keep flying through this because I've I was going to talk about an hour. I've already gone over that, but I really wanted to share with you guys as well, because this is kind of the strategy that I use in Rob's room, right? So, money management secret, the plateau method. This is something that I kind of have done in my own accounts. I especially do it with the kind of setups that Rob likes to do, because they're a little bit, it's kind of a more higher probability. I'm able to use a little bit bigger size, et cetera, okay? Wow, ticks are getting up to plus 800 or so. So let's keep an eye on this. We're getting kind of a decent retracement here. Let me see. Actually, let me check out the Dow here. I want to see what the Dow is doing. All right, so I just want to let you guys know. So now, before I was going to short weakness on the Russell, but right now we're obviously getting a little bit of a strength here. There's an ambush zone on the Dow. We'd have to get close. Well, resistance on the Dow is actually close to about 12,400. So I'll keep an eye on that. If we get there, we'll look at something to short. It's a pretty interesting kind of volatile day here. It's a little tough, honestly, trying to trade and do this presentation at the same time, but I'm keeping an eye on it. That's good, Ronald. I mean, it's perfect. Your stop, next trade. That's exactly what you want to look at. All right. So here's the plateau method of money management, and I think this is something that'll actually really help you guys out that if you've never done this before. Many traders are good at running an account to a specific amount. Maybe they start with $25,000 and run up to 40, and then from there everything begins to fall apart. And this $40,000 in this case represents that trader's plateau. Everybody's going to be a little different. All right. Now, what may happen is, and each one of you are going to kind of know this. Maybe you have $20,000, and every time you get up to 30, you come back down to 20. Okay, or maybe you have $10,000, and every time you get to 14, it comes back down to 10. Or maybe you have $100,000, and every time you get to 130, it comes back down to 100. Okay. So the Republicans have set up a news conference for 11:45 or so. Yeah, I'm sure that's going to prompt some short covering. So if you guys have been trading for a while, a lot of times you guys will kind of know, if you have this, where that kind of falls in. It's like, oh yeah, gosh, I've got a $30,000 account. Every time I get up to like $37,000, $38,000, I just start losing money. It's gonna be different for everyone, but everybody kind of has that zone. Not everybody, but a lot of people do. So like my own plateau has grown over time. For a long time, it was $50,000. Anytime I was trading and got up to, this is like in the early 90s. Anytime I got my account to $50,000, after that point, I could not trade my way out of a paper bag. It would always come back down to like 40 or 35,000. And then at 35,000, I'd get focused again and, get really sharpen the pencils and really start focusing and build it back up to 50. Then at 50, I'd kind of get careless, as Rob likes to say, like house money. And I just wouldn't, I'd just kind of, be a little bit more cavalier about my trading approach. And guess what? I'd give back profits. So what happens is everybody mentally just kind of has those different levels. So what I found is just in talking to people is just to develop a money management technique around this plateau method. All right. So this is a strategy for short-term trading of leverage instruments such as futures and options. Okay, day trading and short-term swing trading. Now we're going to use a $10,000 hypothetical starting account balance. Now your goal here, I just say on this, is to run it up to 25,000. Now it may be different for you. It may be, you may want to try to run it up to 15,000, or even 13,000. Everybody's going to be a little different here, but for, just so we can talk about it and give an example, what we're going to do is talk about, okay, you're going to have 10,000 and your goal is to run up to 25,000. Okay. Again, you can kind of insert whatever number you like there. Now, let's see, now over the course of a couple of months, now it could be like 1 month, it could be 6 months, whatever it is, you've succeeded to do this. You've taken the $10,000 and now your account balance is 25,000. Again, maybe it took a year, maybe it took a month, you caught a really good leverage trade. Or again, maybe that number is different. Maybe it's, your goal is to take 10,000 and run it into 15. It's going to be a little different for everyone. Once you hit your goal, at this point, you're going to take out your original $10,000 plus a profit of $2,500, leaving you with $12,500. Okay. Now your goal is to run the 12,500 up to 31,250, or 2.5 times your starting capital. All right. And again, this maybe it's you multiply it by 0.5. You find kind of a ratio that you're comfortable with. In this case, at 31,250, you're going to take out half your account. Okay, and again, you don't have a timeline on this. It may take you a year. It could take you a month. That's the beauty of kind of leveraged instruments, is that you got a little bit more flexibility than if you're just in a mutual fund or something like that. Now, once you hit that $39,062.50, you're going to take out half, and you're going to repeat it. Okay, again, the time isn't critical. You aren't trying to do this in a week or a month or a quarter. It's going to happen when it's going to happen. The key is that you will follow your trade setups, and then when a plateau is hit, you're going to take out the money out, and you're going to set up a new goal. This goes back to not pissing away your capital. When trading leveraged instruments, one good trade can have a big impact on an account under this plan. This is why it is so critical to keep losses small. It's okay to scale into trades. Again, we talked about this before. You got to know what your maximum size is. And the other part of this is that you aren't trading your whole stake. Okay? So say you have $50,000 to trade with, then you're going to set aside $10,000 as your starting stake to get going in this program. Okay? And this way you can actually take a little bit bigger risks because it's only 10K of your 50K. And if your 10K gets wiped out, then you have another 10K to put in. The goal, of course, is not to wipe it out. You're going to be using small risk parameters and things like that. Now, not everybody's going to have the $50,000. So if all you have is the 5 or 10K and that's it, that's actually okay. You're just going to have to be more conservative in your stop losses. All right? You have to wait and be very, very patient for those very high probability setups. All right, so why does this work? First, it assumes the following, that you are patient for a setup and you're not trading out of boredom, okay? There's going to be days when you don't trade at all because there wasn't a good setup. You're trading in alignment with the larger time frames in order to maximize runners. And there are days, again, when you don't trade because nothing is setting up for you, okay? It's not a contest. It's not a speed contest. Second, it does set you up for a scenario that freak results are possible. Somebody was saying earlier, like, how come CTAs don't make any money? Well, I told you that they're not trying to. They're trying to make their 1% a month or 1.5% a month so that they appear to be very steady so they can raise institutional dollars, because institutional dollars are not interested in volatility. However, people who overtrade or trade without a specific money management plan will fall into the category of 90% of the traders who are going to lose. So in this type of a situation, I would rather you have one good trade a day, okay, than trade 10 haphazard setups. This is not about trying to trade a lot. It's trying to get freak results. And the honest answer to that is freak results are and by freak results, we're saying like more than 1% a month, okay? There's a higher probability of doing that the fewer trades you do. Okay, and I know it seems counterintuitive. It seems like, gosh, if I do a lot more trades, I can make a lot more money, and nothing could be further from the truth. Okay, overtrading is not a trading strategy. Trading speculatively with small sums, i.e. a part of your trading capital, not all of it, on a limited number of solid setups opens up the door for extraordinary results. You combine this with the plateau method of managing your gains, and it also allows the trader to keep the money that they make. Third, it gives the trader a working methodology to focus on instead of just looking for the next winning trade. These combined have proven to be the best method of turning smaller sums of money into significant cash, okay? Which is what we're looking to do as traders. Okay, that's that. So that's what I wanted to cover. It was the plateau money money management method, and this is something that this is what I do in Rob's room. I've got a separate account set up. I'll follow the trades, and it's like great. I'll reach on something like that. Even if it's like, hey, $50,000, great. I made 10. Take out the 10. And I'm back to $50,000. That kind of a thing. So what I'm not trying to do is try to grow an account exponentially. It's like, oh, I'm going to take $50,000 and turn it into $1 million. It's more of a cash flow thing. And it's like, you get to a point, take out some money. You get to a point, you take out some money. And I think it's important for a lot of different reasons, because if at some point you do have a big mess day, what happens is like, wow, I've already taken out a lot of my profits. So this, big mess day wasn't on all my capital. It was just on the portion that I have in there right now. So the question then is, what do you do with the other money? And, it's a little trickier. It depends. I mean, for me, I actually like to buy physical bullion. I like to buy farmland. Okay, that's just my thing. That's what I like to do. Or I'll put it into longer-term option strategies where, we're just kind of trying to suck premium out of the markets. I mean, there's different things that you can do with it. But the thing is that I'm not, allocating all my resources to short-term trading. All right? All right. So hopefully that helps. And again, I was only planning on talking for an hour, and I kind of went through that. But what I'll do is, I'll clean up this presentation here a little bit, and I can post it for you guys. I'll post it for you guys in the. Well, I guess I don't know if I can post it here in the trading room. I'll just post it on the site. And then, I pop into Rob's room. I'll pop into Rob's room too, and talk more about some of the setups that I use for those of you that aren't familiar with it. And different things like that too. All right. For the markets today, I'm kind of in hurry up and wait mode here. It's obviously there's gonna be a news conference coming out, so that's gonna be a little crazy. We'll just kind of see how that goes, and then I'll kind of review the setups I'm gonna be doing in my newsletter tonight. Okay. But that's really all I got. It's probably and Rob, at this point, I didn't know if you had more things to cover, or if we were wrapping it up. We did want to let you guys know that, for those of you that aren't in Rob's room, today and tomorrow there will be, kind of a special deal that if you want to try it out for a month and just kind of see what it's like. Again, I think with Rob's entries, again, my 3 favorite indicators are the squeeze, the reversion bands, well, I like the ticks too, and Rob Hoffman. And he's going to continue to be part of my trading plan going forward. And, I do log in the room and listen to him and see what he's doing. And if somebody has a link, there's a couple of people asking for the link on the details of Rob's room. I don't have it handy, but if somebody would want to post it or share it, that would be great. And otherwise, you guys have a great rest of the day. And
hey, John, we just answered the several people's questions there that were asking about it.
Yeah, so tradethemarkets.com/room.html, if you guys see that there. In fact, let me see if I can
of course,
share it.
Tomorrow we're going to be going.
Like. So, yeah, so if you're interested in trying it out, there's the link, tradethemarkets.com/room.html. And normally the room is $395 a month. If you do want to try it today, you can try it for $295 a month, and with that, you get the level 1 and level 2 indicators for free. Or if you like it and say, you know what, I do want to try this out, you can save even more and get it for $785 for a quarter, which saves you $100 a month off the $295 price. And with that, you get the level 1 and 2 indicators, plus our 4-day professional workshop, which talks about our own setups, and then Rob's CDs that talks about his workshops. And we're going to be doing this again tomorrow, but for those of you that looked at this and said, okay, this looks interesting, I just want to try it out. And, the 2 things are, is one, being able to kind of use this. If you weren't familiar with that money management method, that's something that you can use in Rob's room. And then, the second thing is what I'm excited about is, Rob took a hit on the chin, and just being able to kind of watch how he kind of rises from the ashes from that, what kind of, different techniques he's going to use and stuff like that. And that's typically when a trader is at their best. And so even in that regard, I'm looking forward to it. And Rob, I'm looking forward to your next trade and can't wait to see it. Even if it's a losing trade, that's okay. But I'm looking forward to watching you follow your new plan.
Yep, definitely.
All right,
no doubt
I'm
about
done.
that.
I'm going to turn this back over, and you guys have a great rest of the day.
Hey, gang, hopefully you guys can still hear me. Thanks so much. So everything John said was true. The link I posted for all of you. He is right. I'm looking forward to going ahead and showing you lots of neat things. Tomorrow, too, we're going to discuss, those roughly 29 new things that are going to be neat and additions, little tweaks, enhancements, different ways of doing it, the small lot trader workshop type things I'm doing when I'm trading. And lots of neat stuff there. And so I'm looking forward to showing you that. and as John talked about with my entries and the opportunities to learn from me, a lot of neat stuff. So looking forward to talking about that in the morning and looking at the markets with you. Be nice to get past some of these announcements. Actually, I'm going to be with my group here the remainder of the session now, looking to see if we get some trades off after the Republican announcement. So looking forward to going in and seeing you guys in the morning. Yeah, I thought it was really important, Rebecca, absolutely, to go ahead and share that. And there is, I'm glad you enjoyed that. And there's so much more to go ahead and share. Like I said, it's, as John said, I'll be fair to myself in this case. I've certainly talked about what I've done wrong, but what I do right is usually go ahead and rise from the ashes, as John said, from these things, and go ahead and they have a lot to offer people. It seems like things always get better after situations like these. So looking forward to talking about that tomorrow. And thanks for being here with us till the very end, listening and learning from me and my opportunities for learning, John's opportunities for learning. Tomorrow we're going to do it again, and then we're going to go ahead and actually hear from Hubert as well. So I do appreciate you guys staying with me to the end. You guys are absolutely welcome. Like I said, really appreciate you guys staying with me to the end here, and we'll get you guys all fixed up and take real good care of you with lots of great learning opportunities tomorrow and beyond. So good night. Take care, each and every one of you, and we'll look forward to seeing you tomorrow morning. We'll do it all over again with lots more learning. Okay, gang? Take care, everyone. Bye-bye.